Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. Following yesterday's Federal Reserve meeting, the rate was cut by the expected 0.25%. However, neither FOMC members nor Jerome Powell himself showed a hawkish stance, which is why the US dollar index strengthened by only 0.38%, a modest reaction for such an event. The dot plot indicated the intention to cut rates 2 more times before year-end. In his remarks, Powell even slightly downplayed the inflationary risks stemming from Trump's tariffs, while the Fed raised its PCE forecast for next year from 2.4% year-over-year to 2.6%. Indirectly, this step smoothed out the tension in the confrontation with Trump. We allow for a scenario in which inflation picks up again before year-end, leading the Fed to refrain from cutting rates in December. Is there market support for such a scenario? Yes, and it lies in the bond market's lack of reaction to the rate cut. On the daily chart, the price pierced the target range at the upper boundary of the price channel with its upper shadow. The Marlin oscillator slightly declined. The market now needs fresh data to reseize the current balance. A new consolidation range may form at 1.1724, 1919, with the lower boundary set by the MACD line. It's a blue line on the graphic. We, along with the market, will await a few days for the situation to clarify. On the 4-hour chart, the Marlin oscillator is close to shifting into negative territory. Overall, the area is now likely to focus on finding support. The MACD lines of different scales around 1762 and 1724 appear to be an appropriate area for this. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Gold, following the release of the Fed's interest rate decision, made a strong upward move. Reaching a new ADH around 37.07. From this level, gold began a technical correction and subsequently bounced within the downtrend channel. The technical correction is likely to continue in the coming days, pushing the price down to 200 EMA around 36.34. As long as the gold price consolidates below 36.71, it will be seen as an opportunity for short positions, as the 7.8 mirror level is located in this area, now acting as resistance. We can expect the price to reach 36.52 and possibly even reach the 36.40 level. Gold could find good support around 36.30. This level represents a good point for long positions, as the Eagle indicator shows oversold levels. Therefore, we could look for buying opportunities in the coming days if gold rebounds above 36.34. Conversely, if gold consolidates above 36.71, it could continue its rise until it reached the 61% Fibonacci level around 36 85. The price could even reach the psychological level of 3700. The key level to watch in the coming days is the 3670 area. Strong bearish pressure could occur below this level. Above this level, we could expect a recovery in gold. That's all for today. See you online soon.